Hi viewers. You are watching Millennium Academy Accounting Hub. Important key points of this lecture include Introduction to Nonprofit Organizations, Financial Statements in Nonprofit Organizations. Nonprofit organizations. Nonprofit-making organizations are those which do not buy, manufacture and sell goods and whose primary object is not to earn profit. Their objective is to do good to society through welfare activities. Examples: clubs, hospitals, libraries, trade unions, etc. Financial statements. Some of the important financial statements prepared by a nonprofit-making organization on a regular basis are: Receipts and Payments Account, Income and Expenditure Account, Balance Sheet. Receipts and Payments Account. A receipts and payments account is a summarized cash book for a given period. It is important to consider receipts and payments as they help you create income and expenditure account and balance sheet. Format of receipts and payments account. The debit side is the receipts side. The credit side is the payments side. This account begins with a record of the cash balance and bank balance on receipts side. The final balance includes the remaining cash balance and bank balance on the payments side. Income and expenditure account. The account through which surplus or deficit of a nonprofit-making organization is ascertained is called income and expenditure account. On the debit side records all revenue expenditures relating to the current year. On the credit side records all incomes relating to the current year. The balance of the account, if the credit side is greater than the debit side, indicates surplus. If the debit side is greater than the credit side, indicates deficit. Balance sheet. The balance sheet determines a company's financial position. The balance sheet of a nonprofit organization contains assets, liabilities, capital, or general funds.
If you like a video, then please subscribe to our channel and press bell icon for regular updates.